Good morning and thank you for the opportunity to share with you the Capricorn Metals story today. Capricorn's business is one that's built off two exceptional assets in a Tier 1 jurisdiction. Assets that are designed, built and operated with margin as a core feature at every stage. Capricorn's well positioned today with the strong and reliable cash flows from our Kalgoorlie operation and an exciting development story at Mount Gibson, both underpinned by a company-wide reserve base of 3.3 million ounces that importantly is still growing. Capricorn's board and management team have long and proven track records of reliable value creation across a number of well-regarded companies that have a consistent theme of high-margin assets and shareholder returns. That collective experience of the group bodes well for Capricorn today and is a strong differentiator in a sector where successful developments have been few and far between. I'm new to the Capricorn business, and having spent time in Africa and Canada developing projects and building teams, and having met Mark and Miles during my time in Côte d'Ivoire, when the opportunity to join Capricorn presented, I saw a company that was growing with a great culture and doing things that I like to do. So with complete operational, technical, corporate and operational skill sets in-house required to deliver our projects on the ground and returns to our shareholders, we're well placed to move through a period of sustained growth. We have an excellent register of institutional shareholders, including a large portion held by board and management. The balance sheet is in good shape with 125 million in cash and bullion as at June 30, after paying down the hedge book by $70 million in the last quarter. The company is in great shape to finance the Mount Gibson project through Kalgoollie's consistent strong cash flows. To our cornerstone asset in Kalgoolie, it's been built with reliability and margin as a core feature. A low strip mine and a high throughput processing plant with a simple flow sheet drives reliable production and sector-leading all-in sustaining costs that position Kalgoolie as one of Australia's lowest cost gold mines. Kalgoolie is a great mine now, but it's on the back of an exceptionally successful project execution phase, followed by operational focus and now disciplined cost management to be where we are now. Kalgoolie was built in less than 18 months and transitioned into production seamlessly by our development team. Importantly, a 4 million tonne per annum hard rock project was delivered for only $180 million. Further highlighting the bang for buck inherent in the team that we have. From there, the ops team have consistently run the project exactly as it was envisaged in the PFS. Our reconciliations to the reserve are a testament to the operations and technical teams who have delivered some $465 million of operating cash flow since start-up in 2021. Importantly, with a large portion of that reporting to the balance sheet. I wasn't there when Kalgoolie was built, but I know that it's very hard to do well, and I'm excited to be part of the team that plan to do the same at Mount Gibson. FY 2024 was another consistent year at Kalgoolie, with $160 million of cash flow realised from operations at an industry-leading all-in sustaining cost of $1,421 an ounce from 113,000 ounces produced. The team managed to recover from two significant rain events by accelerating activities out of Bibra in the latter quarters. And for 2025, it's a similar story, with a production guidance range of 110,000 to 120,000 ounces at an operating cost of $1,370 an ounce to $1,470 an ounce, a range that is industry leading. This consistency is the hallmark of Kalgoolie and the team that run it. Last week, we were pleased to announce an update to our reserve base at Kalgoolie that saw the inventory increase by 15% to 58 million tonnes at 0.8 grams per tonne for 1.43 million ounces. The reserve upgrade is a product of predictable geometry, methodical drilling and accurate estimation processes of what is now a very well understood deposit. Importantly is the fact that these ounces are being added are a product of a very strong economics of the mine and protect the all-important margins that we strive for. We're excited by the fact that Kalgoolie is able to continue to deliver strong cash flows and production while also being able to grow. While the upgrade in the reserve is meaningful, I want to take a moment to illustrate the consistency with which that inventory has been grown in the last few years. That growth is on top of 350,000 ounces of production from Karlawinda, making it a 1.8 million ounce project in its life to date. This is testament to the geology and exploration teams led by Jared Price and Billy Higgins, who have delivered nearly 900,000 ounces of growth to the project over that time at a discovery cost of approximately $24 per reserve ounce. And so now, with over 13 years of mine life in front of us, the company is able to reconsider the optimal scale of the Karlawinda project. With the larger reserve now tabled, we've begun work on studying an expansion case at Karlawinda. We're going through the technical trade-off studies to right-size the project, but we anticipate that an expansion in the order of 2 million tonnes per annum will be the likely outcome of that work. Flowsheet design and capital estimation, TSF design, water balancing and permitting activities are now underway. The economics of the expansion study are obviously expected to be driven by a higher production rate, but equally a reduction in the low-grade stockpile rehandle rates will be a significant factor. It's of real benefit to have the balance sheet and the team available to deliver this project, and we look forward to completing the study by the end of the year. Karlawinda is located on prime real estate for discovering meaningful scale gold deposits. Our tenements host 200 kilometres of the favourable greenstone belts on the regionally significant contact of the Sylvania Dome. This setting hosts multiple significant gold camps in the region that are analogues to the 2 million ounces that we have at Bibra. In recent years, we've focused on exploring the ground in the immediate vicinity of the mine with a view to expand our reserves, although in parallel we've built up the understanding of the portfolio through solid exploration and, importantly, a sound amount of heritage clearance work to the point where we're now able to deploy real meters into solid regional targets, as we now have the runway to grow outside of the mine gate. So to our plans specifically for 2025, where we are excited to have worked up some really good projects in Central Lode, Badlands and Mission Road, all prospects that represent the bulk of an aggressive 43,000 metre program for targets all within 30 k's of the mine. At Central Lode in particular, with the gravity signature being a clear analogue to Bibra, along with the strength of the scouting results from last year's projects on the right here, we're very keen to expand the footprint of this one, given that we've only tagged 450 metres of strike of what is a 10-kilometre system that remains open along strike and at depth. We look forward to delivering results for these programs in the coming quarters. So now turning to our second asset, the Mount Gibson Gold Project in the Murchison region of WA. Mount Gibson's a project that has revealed its rare scale and quality consistently since its acquisition in 2021. An historic operation in the Murchison region adjacent to excellent infrastructure, it ceased operations in the 1990s in a low gold price environment. It's now been advanced by our exploration and development teams to what is a solid 1.83 million ounce reserve base. In parallel with growing the reserve, we've been de-risking the project by advancing works on the ground and finalising permitting. We're now completing the final field studies in the coming weeks and plan to have our public environmental report submitted for approval by the end of the year. Mount Gibson's a genuine scale project in the hands of a company that has the capacity to deliver it. As I mentioned, the reserve at Mount Gibson is a significant 1.83 million ounces and it is growing. The current reserve is estimated at a conservative gold price of $1,900 an ounce, some $1,800 below the current spot price, driving the margins that we strive for. Importantly, the reserve pits have an average depth of approximately 160 metres, so there is great potential for these to be driven deeper over time with further drilling over what is an 8-kilometre strike. So we're very bullish about this reserve increasing in the coming years, which will put it in very rare company in terms of scale and size. We look forward to providing the next update to the Mount Gibson Reserve in the second quarter. The PFS for Mount Gibson was completed in April 2023 and further updated earlier this year, and it supports the reserve and illustrates Mount Gibson as a robust, large-scale and high-margin project in an exceptional location. These factors combine to provide a very strong financial outcome in the PFS including a pre-tax NPV of $898 million and a payback of 2.3 years. Importantly, utilising a conservative gold price assumption of $2,750 per ounce in the financials. Importantly, the project is expected to be funded by the ongoing cash flows from our Karlawinda operation. It's worthwhile reflecting for a moment, given the success at Karlawinda, on the similarities between it and the Mount Gibson project. The flow sheet and operating and design themes that drive low cost and consistent production at Karlawinda are incorporated into the larger project at Mount Gibson by the team that built, delivered and now operate Karlawinda. So we're excited by the fact that Mount Gibson is designed to succeed, and importantly we have the team in place to deliver it in the same way as Karlawinda, only bigger. Our exploration and geology teams have a solid record of adding resource upgrades in recent years at Mount Gibson. With 3.3 million ounces and growing, and importantly over 80% of that inventory sitting in the indicated category, where the company has a strong record of conversion to reserves. The exciting results on the left here from our current programs that are post the last estimate illustrate the strength of continuity of the deposits at the base of what are relatively shallow resource shells. So we'll continue to drill aggressively as we believe the resource will grow at modest open pit depths as well as potentially as an underground opportunity. I like the chart on the left here as it illustrates the growth credentials of both the project and the team in recent years. Jared and Billy's groups really have their eye in and are reliably extending the resource and reserve shells at the base of what are fairly shallow pits at extremely low discovery and conversion costs of approximately $30 an ounce. Not all ounces are created equal, but at Mount Gibson drilling continues to deliver high quality reserve ounces consistently, and we look forward to seeing what FY 2025's program will deliver. As I said earlier, we're quite excited by the evolving story at depth at Mount Gibson, and the diamond rigs are currently turning on a 4,500 metre program following up on last year's results that are highlighted here on the left and include stellar intercepts like 14 metres at 12.85 grams a tonne and 17 metres at 9.6 grams a tonne. These results provide tangible encouragement below the current reserve shells and begin to shape an underground opportunity at Mount Gibson. A good number of these results illustrate strong width and grade tenor at depth, and we're now expanding upon that with the current 12-hole program that we expect to complete this quarter. This is an exciting development for Mount Gibson, which has already demonstrated its bona fides in terms of scale and quality, and now the potential of underground grades emerging. We look forward to having a bit more to say on the underground project towards the end of the year as these results come in. In recent years at Mount Gibson, we've been focused on growing the solid reserve base. Although through solid exploration work and again a large amount of heritage clearance work, we now have an encouraging runway in front of us with significant metres planned for targets outside of the existing resource base but within the project footprint. Last year's programs produced some great results at both ends of the project. Sundance in the southern end with 15 metres at 18.56, and Ace High in the north with 16 metres at 10.67. We're excited to extend these and other targets aggressively in FY 2025 with a 30,000 metre near mine drilling program that should provide results and news flow similar to the exceptional results we put out in July. In Mount Gibson, we have a scarce, large-scale, high-margin project that we believe to be a clear standout in the sector in terms of growth projects. We are making it bigger, while also advancing the project by building key infrastructure on the ground like the camp, as well as continuing design and procurement works. All of these works will compress the construction timeline and ultimately de-risk the project. We know that it takes time to permit and build these projects, but we believe the massive value inherent in Mount Gibson warrants the right amount of time be taken. To paraphrase Warren Buffett, our delivery of this project in the next couple of years is going to see a huge transfer of value from the impatient to the patient, and we believe our shareholders to be on the right side of that value transfer. So, to wrap up, I'd like to remind you of the compelling relative quality of our assets. This chart shows plus 1 million ounce reserve projects in Australia. And outside of those held by the majors, Mount Gibson and Karlawinda are 2 of 7 of these quality assets in the mid-tier sector that are still growing and produce at the lowest quartile operating costs. Running those assets are a team with proven track records in the job in front of us that consistently deliver for our shareholders. Capricorn as a combined business is in great shape. We have a 3.3 million ounce company-wide reserve base that is growing, and we run a business that's consistently produced industry-leading cash flows. We have a multifaceted growth program that includes near-mine targets being developed through systematic exploration, extending the resource and reserve bases through sensible, logical step-out drilling, the Mount Gibson development project, the Mount Gibson underground opportunity, and now the Karlawinda expansion case study now underway. That's a lot of growth and a lot of value to be delivered in the near term. And so, as illustrated by our position on the chart here, Capricorn's 3.3 million ounce reserve base represents an excellent opportunity for the investor to enjoy the accretion move up the vertical axis as we deliver on these initiatives. We look forward to bringing you updates on these throughout the year, and I thank you for your time today.
Thanks, Paul. That was a great presentation for a great company. We've got a couple of questions here just before we wrap up. Paul, what attracted you to Capricorn, having started in this role early this year in May?
Personally, I like developing projects, and the company's got a fantastic growth portfolio in front of it, both at Karlawinda and Mount Gibson. And the guys go about it in similar ways as we've done previously, particularly at Roxgold.
Great. And are there opportunities to incorporate more underground tonnes at Mount Gibson?
Yeah, well, look, we think so, and as I enunciated in the slide, I think there's, it's early days, but clearly those intercepts are strong at depth, and Jared and Billy and the guys are pretty methodical in the way they go about it, so we won't rush, but we're certainly starting to look at what that might mean. Mount Gibson's big enough all by itself, but that would be a really neat sweetener to bring into it.